Hi, this is Kerry Artak with Wicked Stocks, bringing you your Mag 7, your weekly update in the Mag 7. We do this every week on our free Wicked Stocks YouTube channel. And some of these stocks we actually cover also at wickedstocks.com on a regular, more detailed basis. And, one or two others, actually Tesla in particular, we also provide on our YouTube channel every single day in a more detailed basis. But this is the Mag 7, so it rounds it out. Microsoft I start with. By the way, this is Monday, February 2nd, 2026, and this is for the entire week. All of these are weekly bar charts, just so you know. And broad brushstroke analysis, really. Nothing, I don't really provide any 3 to 5 day swing trades or some 2 to 3 week, 3 to 5 week. But for the most part, these are longer term moves that play out over weeks and months. So it was back in July and again in October that we tested this band of channel resistance, the top of which is 582.48, and this inside channel almost equally respectable 556.58. This is your range of long-term resistance, as I've been mentioning, and I'd mentioned that following the testing of this that you must allow for. I use the word allow very deliberately. I can't say that I expect 390.88, but if you're looking at channel dynamics, you must allow for that. Even if it's a 30-minute bar chart and you're looking at a particular stock that's holding within a channel for, say, 2 or 3 weeks, when you test the top of a channel like this, you must allow for the channel base. Not that you expect it. You're looking for sell signals on the way down, but those sell signals, you act aggressively in light of the fact that you're in this structure, the top of which you just tested. Meta actually had a strong week last week, pushed through this channel top after falling away, and we've had other signals on the way down, etc. I'm not going to go through all the backtracking, but 694.85 is your weekly support. I've been mentioning how these are your long-term support levels. I don't expect to see these anytime soon, unless we were to fall back and close below 694.85. And then I think there's a very real possibility that by the end of March, perhaps, we could fall into the upper 560s, where bottom picking can take place aggressively. As we move through the second quarter, we can round up from here nicely. But that's not where we're at. We're above 694.85, and I'm looking for upward continuation back to this high area that I can show right here. 785.23 to 796 and a quarter. 96 and a quarter is the actual high. 85 and 85.23 is the actual high settlement price all time on the weekly chart. This area is likely. Present volatility, we could see this within a week or two, but we could also ease back. Volatility could contract a bit, and this could take the better part of 2 months potentially. Holding above 694.85, your bottom picking territory for Meta as we move through the month of February and into March, anticipating 785 to 796, where we actually could double top on a monthly basis, perhaps longer. Longer term, we have long-term resistance in the 873, 895 region and climbing gradually. We have this newly formed inside channel at 873.30 that is based in part on the low that was put out 2 weeks ago. And so if we were to close above 796 and a quarter, I would expect this area as the next 2 to 3 month target. It is a bit stair-step. I can't say that based on last week's buy signal above 694.85 that we can expect the 870s, 890s. That would come into play if we close above 796 and a quarter. But I am expecting this upper area over the next 2 months, possibly within a matter of 2 or 3 weeks. Alphabet. Once again, Alphabet is just in this sort of vertical move. There's been no significant sell signal all along. That would come into play with a settlement below 307.78, and we're not going to see that this week. And we have this newly formed inside channel at 321.15. So you're either already long, and where do you get out? My suggestion is to get out on weakness, because this can just continue going. I don't know where it's going. I don't think anybody does. It's so steep that to create channel tops, et cetera, is just, it's not really worth it, because they don't hold very well with these steep moves. So here's what I'm going to say about Alphabet. A near term through through February, you can buy 321.15 on weakness, anticipating ever higher trade as we continue into February, March, April. If we close below 321.15, well, if you want to call that a 3 to 5 day swing trade downside, be my guest. 307.78 likely then possibly within the week, where we could bottom out through the month of February into March and round up. Upward momentum through the rest of the second quarter, through the rest of the first quarter and into the second remains clearly intact above 307.78. No good reason to sell Alphabet unless we close below 307.78. Then I think you can lighten up on any long position you may have, because I think there's a real, with these church steeple rallies, I call them, once they're in, once they're done, once they show a sell signal, they deteriorate in similar fashion at a similar pace. And so 231.66, I think, would be a realistic objective were we to close below 307.78. This longer-term channel top is really where this rally began, and it can contain annual selling pressures, and I'm going to call this a 2 to 3 month target were we to close below 307.78. Until then, stay long Alphabet and just continue riding it out. On to Amazon. Amazon has this channel bottom that we've yet to actually test, but we've come close to it at 227.05. This is our base of support, can contain selling through the second quarter. In fact, I'm going to jump to the upside right now, through the second quarter, and above which this upper 250s, the high that was put out back in November, and this channel top that we pushed through on an intra-week basis but never closed above at 257.04 is likely. This is like a 3 to 5 week play. So I don't think you're going to get the opportunity to buy 227.05 this week, but if so, it is a buy opportunity up into the upper 250s. Now, this is a channel structure that also has a top presently in the upper 270s, low 280s, and this is a long-term channel top that we've actually yet to test. I think you can see it better. No, you can't see it better in this image. Sorry for jumping all over the place. So, I think you can buy 227.05. Nearer term swing traders can hold out for the upper 250s, but near term investors may hold out for the upper 270s, low 280s over the next 2 to 3 months. Closing above 258.60 does put this 278.18 to 280.31 region in reach, possibly within 3 to 5 weeks, where we can place an annual high. This is, after all, a 3-year long-term rising channel top. Now for the downside, I'll jump back to this chart. Were we to close this week below 227.05, we've got a good first quarter high within a matter of, I'm going to go with a month, 2 at the most. This could be a 2 to 3 week collapse to 205.25, and we can bottom out here and round up a spell. But I do think that you must allow, and I'll use that very deliberately, a settlement below 227.05 would allow the 179.11 formation. This could be 2 to 3 months, could be 3 to 5 months. I say that because this is actually descending, and by June it converges anyway with 179.11. So if we violate this channel bottom, I think eventually this stock could make its way all the way back into what would then be the low 180s, mid 180s. On the way down, 205.25 offers a really solid swing trade for those of you who like the 3 to 5 week time frame, a shorting settlement below 227.05, taking profits at the descending 205.25 formation. On to Apple. Apple I cover every single week in great detail on the wickedstocks.com subscription platform. So I'm very coy about this. I don't like to I'm actually providing less information in Apple in this free video than I do in all the others that you've seen so far in this video. So, but here we have it. This is the big broad brushstroke. We've tested this 5-year channel top twice now in the last year and 4 months. 285.69 most recently was in December, and we've fallen away. And once again, holding below long-term channel resistance, you must allow for the possibility over the next year or so, the upper 180s and climbing. We do presently have a 2 to 3 month objective at 214.82, a 5/8 Fibonacci from the February low against that recent December high. It also correlates well with this shelf top region that lasted for several months. If we do, on the other hand, close above 285.69 in the coming weeks, and that's not going to happen this week, but it may happen by, I don't know, the end of the second quarter, we're in a new framework where we're expecting continued gains as we move into 27, 28. This could be a 2-year run to this full channel extension at 385.41. On to Tesla. We cover Tesla every single day on our free YouTube channel. If you don't know that already, this is just a reminder of what I've always start with on that daily platform. 409.50 is our 3-4 month channel bottom, can contain selling through February into March, and from here we can, over the next 3 to 5 months, round up into the 533.78 region where Tesla finds its 6-year channel top that may well contain buying for all of 26, and we could fall away. On the way up, you've got a 3 to 5 week kind of a swing trade here at 473.82, the low of the high that was put out back in December. This is the all-time high. We gapped below it, so it does have resistance measures. Can contain weekly, possibly monthly buying pressures. We could fill this wedge out for a number of weeks. If we close above 473.82, expect a 1 to 2 month rally to that 533.78 level. Downside, if we close this week below 409.50, we've got a good first quarter high, and we should within 2 to 3 months, possibly much faster. We've seen that before, 324.23, which is a full channel extension, able to contain selling on a quarterly basis, possibly through the rest of 26. NVIDIA. We cover NVIDIA every single day on our wickedstocks.com paid subscription. We used to cover it every single day on YouTube for about 3 years. Now it's found at wickedstocks.com. We offer a 2-week free trial, by the way, at all of our work. So if you're looking for NVIDIA analysis day to day to day, you can definitely get it there. But this is broad brush stroke weekly analysis that I include with Mag 7. We have this 10-month channel bottom that we've been mentioning for the last 2 or 3 months following the settlement below the inside channel that can contain quarterly selling pressures. And once tested, we can round up into this 219 to 228 region. These are ABC wave counts. We don't have them labeled. We don't show the math, but we're also expecting 210.08 as a 3 to 5 week target. Now that we've tested this 10-month channel bottom now at 182.15, 210.08 is likely by the end of March or sooner. You can bottom pick 182.15 on a day trade, 3 to 5 day, 3 to 5 week basis, because from here we can round up to this 210, should round up to 210.08 and climbing, converging in early March with this area anyway. So it's kind of more of the same. It really is the same idea that by the end of February, we should push into this 219 area, holding above 182.15. Now, if we close below 182.15 in the coming weeks, we've got a significant sell signal that can yield this 129.87 3-year channel bottom within about 3 to 5 months or less, where NVIDIA can bottom out for all of 26, and in fact, above which we do maintain a pretty aggressive 3-year uptrend. There are other elements that I haven't mentioned. For instance, during the week, we've got this channel top. I could talk about that, but you could see that for free. No, you can't see that for free. What am I talking about? That's paid. I'm sorry. I'm going to leave it alone. One other thing I want to mention that we also bring up in our daily video analysis at wickedstocks.com is this pretty well-defined head and shoulders formation. And there's a neckline here. I'll just give that to you. That is at 174.12 this week. Can you see that T2 inside the yellow box? So, there's one way to play this. You're aggressively buying the low 180s, anticipating upward rotation into the low 200s over the next couple of months. If we close below 182.15, that may only be a rationale for exiting your long position. Going short aggressively into the second quarter could be done with a settlement then below the 174.12 neckline of this head and shoulders process, because there is a possibility this neckline may play spoiler on a long-term sell signal that emerges below 182.15. So long above 182.15 and then aggressively short longer term below 174.12, expecting the low 130s within probably 2 to 3 months of closing below that neckline. Finally, Palantir is not part of the Mag 7, but I've been mentioning it anyway. We had a pretty classic sell signal 2 weeks ago. I hope you played it because here we are. We opened for the first time below this rising channel bottom at 178.24. I'd mentioned how this is a sell signal to this descending channel bottom at 133.98, and we're probably 70-80% of the way there now. 133.98, descending channel structure, may well contain selling through the month of February, and we can round up from here. I also like this as a beginning, I should say, of a bottom picking zone down to really 125.41. These converge in about a month and a half. And so I'll leave that to you. But I will say this. I like buying 133.98. We can spike below it, tag 125.41 on an intra-week basis, and as long as we continue placing weekly settlements above this structure, I'm good to stay long if you are reversing. If you're reversing from short to long in this lower area, great. Let's just have continued weekly settlements above 133.98, because if we close below 133.98, I do see this 87.60 to 96.24 region as the next objective. And what is that? Well, I'm just going to, I'm going back to this head and shoulders. We violated the head and shoulders. This is not as classic textbook, but you can see, left shoulder, head, right shoulder, and this is really the neckline. We violated that this week. T4 is 151.98. When you violate a head and shoulders formation, the rule of thumb is that you will continue falling by an equal distance to the range of that head and shoulders. There's different ways of measuring it, but if I take the difference between this high and this low, it takes us to 87.60. If I take the difference between this low and this high, it's 96.24, both of which are valid. And I think, if we close below 133.98, this could be the objective. Now, the head and shoulders sell signal is not 100% reliable. I need to mention that. I mean, it is an idea, and it does show weakness, but we've already got weakness with that settlement below the channel bottom at 178.24. So we're already in that sort of category. 133.98 is your base of support through February, and if we close the week below it, then yes, expect the upper 80s to mid 90s this could be within 3 to 5 weeks. This stock has a history of high volatility. I'm going to leave it at that. Gosh, I'm almost pushing 20 minutes here. I appreciate you sticking along, and I'll be back next week with another round of the Mag 7. You have a great week.